You may have heard the saying, cash is king. Well, based on my experience last week, that definitely wasn't the case. We submitted a cash offer and got told that we didn't even have teeth to our offer. So that has us wondering, is cash still king in the real estate game? According to the National Association of Realtors, by the end of 22, cash sales accounted for a whopping 28% of all home sales. That's a 5% jump from the previous year. All cash offers are becoming more and more prevalent. On that note, we are here to give you another Central Coast market update. Darryl is joining us again today, and he has a few topics that he is going to be sharing with all of you, including the trends of cash offers and explore whether they truly reign supreme in today's housing market. Thank you all for tuning in, and thank you, Darryl, for joining us.
My pleasure. I'm happy to be here.
Before we have you share your updates, we would like to give a brief update of the SLO County real estate market by sharing last month's stats from the California Regional MLS. Serena, take it away.
Yes, May of 2023, the median home price dipped a little bit from $851,000 in April to $830,000 in May. This is still just a little bit higher than we were a few months ago though. Since January, we are up $80,000 for the median home price, which is great news for our sellers out there.
Yes.
Months of inventory is still on the lower end, just under 4 months. The number of sales is up from 177 in April to 277 in May.
It's a big jump.
It really is.
Which is almost the same amount as we had last year in May.
Great news.
I agree.
Even though the inventory is low, there are more listings coming on the market, but they are going into escrow so fast that it keeps the number low. Buyers, this is good news for you because there are more opportunities for you to find your perfect home. Days to sell is at 27, which is lower than it has been. Keep in mind this stat does cover all residential listings, including higher end homes, ranches, and senior communities, which tend to stay on the market a little longer. The average listing is moving a little quicker than 27 days. Jen, what are you seeing on the seller side?
Great question, Serena. We are back to a multiple offer situation. With all of our listings, we do the coming soon advertising for about a week or two, and then we get it on the market into active status. We are getting back into the routine of picking an offer review date like we were when the market was really hot back last year and in COVID times. It seems like more and more agents are doing this again and having their listings sit for at least a week to give buyers the opportunity to get to the house and get their offers in. If we weren't doing this, I believe that the number of 27 days on the market would be much less. On a totally separate note, we got some not so good news last week about insurance. State Farm will no longer be issuing new policies for anyone in California. And as of this morning, we also heard that Allstate is no longer doing it as well. We aren't quite sure what's going to happen, but we wouldn't be surprised if other insurance companies start increasing their rates or stop coverage altogether. There is a California state fair plan that buyers may be using, but this plan typically tends to be anywhere from 2.5 to 4 times more expensive than a normal insurance policy. This policy also only covers fire insurance, so you would have to get another homeowner's insurance policy as well. So that could be hard for some buyers having to pay for 2 policies. This is going to be an issue that we're really going to have to work with our buyers when we first open escrow and even talk to them prior to escrow about figuring out what they can afford.
Darryl, we were wondering what you're seeing on the lending side and if you're seeing a trend more towards cash offers.
Cash will always be king. We are seeing a trend toward that, and in terms of sellers, I also believe though that what the seller is looking at is the bottom line. They want to see how much they're going to net from the transaction. So just because they're paying cash doesn't necessarily mean that they're going to win that transaction. As a reminder, what the seller wants is cash and what the buyer wants is clear, unclouded title. Yes, you can come in with cash. That might help you to close a transaction quicker, but what I've been seeing firsthand is that most sellers are looking at the bottom line. How much am I going to net from the transaction? They want ease of process. So I think as a lender, anything that we can do to help deliver that and to appeal to that seller and what they might be looking for is an advantage. For those that do come in all cash, as a reminder, there are different strategies that we can take to help that buyer to purchase all cash, and they can close the transaction perhaps at a slightly lower sales price, and they could always do a cash out refinance afterwards. There is no seasoning requirement on the loan to do that. There are different ways to win, but I think more than ever, you want to try to appeal to that seller and what they're looking for. Are they looking for a short time frame to close? Do they want more time to identify an up-like purchase? I think that your jobs as agents, that's a big part of what you do, is try to appeal to what they're looking for, and any edge that you can provide, I think, is beneficial.
Definitely.
So Darryl, we were also wondering if you've been impacted by the changes with the insurance companies yet.
I think it's relatively new, and I think we're all going to be impacted. Yeah, it's a big deal that State Farm and now Allstate, that they're both pulling out of the California market, that they will temporarily, not be writing new policies in the area. They will continue to work with their clients that are already previously insured. The insurance agency is highly regulated, just like the loan business and the title industry is. I think at some point, and this is after talking to a State Farm agent that I spoke to today, I think it's likely that the state of California will jump in and take action. They really need to, because what happens is that they negotiate. The insurance company has been bogged down by losses. They've had staggering losses due to wildfire and also inflation, that the costs of the policies won't fully cover the cost to rebuild in the state. And California is notorious for all of its regulations as well. Very often, as the insurance agency might say, we need to raise rates by 10%, but the state of California might say, well, we will allow you to raise it 5%. So they negotiate and they will proceed for a further amount of time, but it's getting to the point where they can't be profitable. That's why they've backed out of the industry in California temporarily. But I do think at some point the state will step in because they have to, so that it's more equitable. Otherwise, there will be more insurance carriers that will back out. So in the meantime, the best thing that you guys as agents, we as lenders could do, we need to be as proactive as possible. That when we meet with our buyers, they say, hey, we're interested in this property, and they get an accepted offer. That's one of the first phone calls that they can make, is to talk to different insurance companies and say yes or no, will you insure this property and at what cost? We need to know that on the lending side, because that has a lot to do with the debt to income ratios, and that can affect the cost of the loan and the risk involved, and we need to make sure that it's also affordable for our buyers.
Definitely. Darryl, we have been hearing this policy with California Fair Plan. Can you tell us a little bit more about what that is and what our buyers might expect with that?
Yeah, the California Fair Plan, it's not always fair. It's quite a bit more expensive. It's become a catch-all program when you have a situation due to risk where a normal carrier will not insure the property. But in order to provide a loan to that property, you have to have insurance. So the California Fair Plan, as you mentioned, I mean, the pricing can be, as you mentioned, 2.5 to 4 times as much for coverage. It's just something that, again, if we explore it up front and try to uncover options in advance, it's going to be the best possible experience for the buyer.
Have you personally done many policies with the California Fair Plan?
Not many. I've seen some that we thought were going that direction, but ultimately we found local carriers here that would do them. So we had to dig a little bit deeper to find that. Sometimes if you go direct to a company like Farmers Insurance, let's say, versus a broker, sometimes going direct can be a benefit. Sometimes going to a broker can be the better benefit because they work with many different carriers.
That makes sense. Thank you.
It's good to shop both of them.
Again, weigh all your options and know what's available to you.
Yeah, and then what does that coverage actually look like? What all does it include? And that's where it really helps to work with an expert in that field.
Jen, I think you mentioned that California Fair Plan is only covering fire.
Right, so that's just fire, so they would have to get another homeowner's insurance policy. So they
probably for liability, I'm guessing.
I can see that quickly becoming cost prohibitive when people are probably working more towards their higher end of their budget for the mortgage payment.
Right.
Yes.
So researching it, knowing what it is in advance, then you can make a really informed decision.
That's true.
So Darryl, how are the rates looking these days?
Rates look pretty good. They're still higher than they were over a year ago. They've been normalizing a little bit more. It did help that the federal government, that our Congress reached an agreement on the debt ceiling. That uncertainty was not good for our business, and it drove rates up. The previous 10 to 12 days. But then the debt ceiling agreement was reached. That really helped to stabilize the bond market, which then improved for several days in a row. The rates are going to go up and down. With interest rates, typically they go up quickly and they decline slowly. We're in that period of time where we've seen rates go up quite a bit, up above the 7% range. Now they're coming back down. I would say that for the most part, best execution with a mortgage is probably in the mid-6 to close to 7% range. Some rates will be higher, some will be lower, depending upon the situation. It will take time in this market. The interest rates are going to follow the inflation figures. The inflation figures are starting to get better. And the more that they come out, there's more data to support that. That's going to be better for interest rates. But there's also going to be things out there that are going to show that we are still dealing with a lot of inflation. So some rates, some days it will be up, some will be down. But over time, we do expect it will get better, probably later third or fourth quarter and into next year.
That's great.
At least there's good news on the horizon.
That's right.
Yes.
Lots to look forward to.
Yes. So Darryl, what's it looking like for first-time home buyers as far as rates?
You know, I'm glad you brought that up because there actually are some incentive for first-time home buyers these days. Just a moment ago, I was talking about conventional loans. If you're a first-time home buyer and in certain segments, you're actually getting an additional enhancement on those rates that could even price better than what I just mentioned. In addition to that, we have governmental loans as well, VA, FHA, USDA, and the like. And the rates right now on the FHA and VA loans, surprisingly, are near 5%.
Wow.
They, as a reminder, are
Very good.
government subsidized. They often price better than conventional loans. In some cases, jumbo loan financing will be a little bit lower than the conventional financing that I mentioned as well.
Again, more good news.
More good news. And I'd like to say, I mean, just nowadays there's a loan out there for everybody. No matter what your situation is, if you're self-employed or a first-time home buyer, try us. And there's a lot of different products out there to suit you.
Definitely reach out to Darryl. Our market is still hot like the blazing summer days that are ahead of us. Homeowners, if you're looking to sell, now is the time. And for those buyers out there, don't sweat it. There's still plenty of opportunities for you out there to land your dream home. We'd like to express our gratitude for our lending expert, Darryl, for joining us today. Thank you.
I'm grateful to you guys too. Thanks for including me.
And for those of you considering moving to wine country, we've got you covered with our complimentary relocation guide. Click the link below to get your free copy. Let's begin the journey to your new home.
Serena and I just finished a fun video about shopping in Paso. We will also have a restaurant guide for downtown Paso that will be coming soon, so be sure to watch out for that. Please reach out to any of us anytime if you have any questions. Thank you all for tuning in. We will see you next month for another market update. Cheers!
Cheers!